Let us start the session. Good evening to you all. My name is Divya. Today we are here to have another session on business entities, formation and operations. We have speakers from A&B Legal, Ms. Rohini Nair. She is the partner, corporate and private equity. And Mr. C.S. Jigar Shah, he is associate partner of A&B Legal. And I'll just welcome to both of you for this session. And I'll just, for the participants' information, I'll just share what exactly A&B is actually. A&B provides it's a legal firm. It's a legal, all-round legal solutions, and which provide a wide range of legal services, ranging from basic to strategic advisory, compliance, transactional and litigation support on all aspects of Indian civil, corporate and commercial law. And welcome to both of you for this session. And this is the second session, and thank you very much for confirming and having this session here. And welcome to all the participants. Over to you, Rohini. Thank you.
Thank you, Divya. Thank you very much. Good evening, everyone, once again. And it's good to be on this platform again to be discussing various aspects around formation of business entities for startups. Okay, so last time when we had a session, we briefly touched base on a lot of aspects around setting up of an entity, how to run the business operations, the contracts which are involved, including investments and funding related aspects. Today, what we intend to do is to concentrate only on setting up of a business entity and various aspects around it, including the business licenses, the general as well as the specific licenses, the labor compliances that you as a startup need to keep in mind while you are conducting your business. Right. What are the most popular business types of entity? Obviously, it's the private limited company, which is governed by the Companies Act 2013. The LLP, which is governed by the Limited Liability Partnership Act 2008. The sole proprietary firm, which is obviously not regulated. The partnership firm, which is governed by the Indian Partnership Act. It could be either registered or unregistered. There's an option. And last but not the least, the one-person company, which is governed by the Companies Act 2013. Before even I let Jigar take you through the entire process of incorporation, including the statutory compliances around it, let's talk about how do we go about evaluating and coming to a conclusion that which is the right kind of entity that we should incorporate for our business, right? Now, there are various points to be considered while we arrive at a decision. In fact, selection of a suitable form of legal framework of an organization is one of the most important entrepreneurial decisions that you as an entrepreneur need to take. Hence, there are various factors that you need to keep in mind and evaluate before you arrive at a decision. Next slide, Jigar, if you can. First is the paperwork for registration process. I mean, we all know that there is there's a hell lot of paperwork when you're talking about a structured entity. In fact, different entities have to be registered under different legislations, like we just discussed, depending on the nature of entity. Sole proprietorship, like I mentioned, does not require a formal registration, whereas a private limited company or an OPC needs to be registered. Hence, the level of compliances in the paperwork while incorporating an entity differs from entity to entity. So that needs to be kept in mind while you are deciding on the kind of entity that you want to have in place. Next. The incorporation and the compliance cost. Now, because there is a process in place for carrying out the incorporation process, for incorporating an entity and registering an entity, there are these costs involved. There are these costs attached to it. So registration cost is like a one-time expenditure, but the focus should be on the compliance cost. Obviously, it's not just about compliance. It's not just about incorporation, but the periodical compliances which are involved, and obviously which involve cost, because you as a startup would have to engage a professional to help you carry out those compliances. So compared to a private limited company or an OPC or an LLP, a sole proprietorship firm is easy and inexpensive to form. Private limited company has the highest cost of compliance, followed by LLP. Periodical compliances, like I said, the degree of compliance, it is annual filings or any kind of periodical filings, depends on the nature of entity. In fact, the degree is highest to lowest. So company comes on the top, followed by the LLP. Thereafter, you have the one-person company and partnership firm, and the least is at, or if I can say nil, is sole proprietorship. Of course, there are these tax returns that you have to file, but it's the least at the sole proprietorship level. Now, if you as a startup are not looking at funding and you're intending to go bootstrap all along, then this point should not be relevant to you. But in case the kind of business that you are into, you are of the view that tomorrow you would require some external source of funding, then yes, you need to bear this point in mind or consider this point in mind while you arrive at the kind of entity, the nature of the entity that you want to go with. So if the business is aimed at having a high growth rate, then there is a need to raise funds at various stages, that is external sources, like I said. So these VCs and the angel investors usually prefer funding the structured entities, right? So investors might not go in for a sole proprietorship or, for that matter, an OPC. And let me remind you that FDI is only permitted in private limited company and LLP. In fact, LLP is a recent inclusion, but earlier it was only a company who could take foreign direct investments. While now today its LLP was also permitted to take one. But apart from these two, no other entity could get in any foreign funding. So in case the kind of business that you're into or the product that you're into, probably a deep tech product or some sort of sector which is very niche, and the target audience, the target client base is abroad, and you think that the foreign investors would be interested in putting in money into your business, then and if you think at some point in time the FDI needs to come into your business, then you need to be mindful of the fact that it's only a private limited company or an LLP that can get an FDI into your business. The personal liability, while in the eyes of law, for a sole proprietorship and a partnership firm, the entrepreneur, the partners are equivalent with the entity, and hence the liability of the sole proprietor or the partners, for that matter, is unlimited. While that's not the case in case of an LLP or a privately limited company, and for that matter, an OPC. So This also needs to be kept in mind. The liability, your individual liability would be limited in case of certain kind of entities. The tax liability of the entity itself. So there are these tax laws in place. There's a defined tax structure for each form of entity. Some structures, being separate legal entity, are taxed directly. For instance, a company and an LLP. So in case of an LLP and a company, the members, the shareholders, directors are taxed separately, and the company is taxed separately. So is the case for the LLP. So it's very important for you to approach the right set of professionals to evaluate the tax implications and accordingly arrive at a decision. The next is the management decisions. See, if you're intending to hold the decision making authority just to yourself, and you don't want anybody else to pitch in uh, or give away control, then then a company or a LLP will not make sense. Because when you are looking at a company and or an LLP for that matter, and if you're looking at external funding to come in, the investor who comes in would certainly get some stake along with some control in the decision making process. So the control over management decisions differs with entities and their structure. For example, in a partnership firm, the control is divided amongst the partners, and different rights and responsibilities can be allotted. In fact, in a private company, the directors have direct control over the operational transactions. However, shareholders' approval is required under the Act. Hence, it is very important for you to evaluate that whether you want to keep the control to yourself, or are you ready to probably share it with somebody else, and accordingly take a call on it. If you're thinking of tomorrow setting up the business and thereafter probably handing over the mantle to somebody and then probably moving out, then yes, management decision, this point needs to be taken into consideration, and probably you should go for a more structured entity. The next thing that needs to be kept in mind is the transferability. In case of a sole proprietorship and a partnership firm, because the entity is not a standalone entity, it cannot be transferred. So along with the partners, along with the entrepreneur, the sole proprietor, the company dies down. So it cannot be transferred. While in case of an LLP or a private limited company, or for that matter, an OPC, the ownership can be transferred. In case of a company, it can be transferred by way of a share transfer. Hence, the lifespan of the business, the lifespan of the company is long enough in case of the LLP, private limited company, or an OPC. So this needs to be kept in mind while you're arriving at which is the kind of entity that you want to go for to carry out your business operations. Hence, keeping all this in mind, it is very important to take these factors into consideration and make a wise and informed decision on which is the right kind of entity which would suit your business, and how would you want to go about with it. With this, I think it's important for us to now understand the entire incorporation process involved in setting up these entities. Jigar, over to you.
Thank you, Rohini. So, good evening, everyone, and thanks a lot, Rohini, for taking it through the basic process of deciding the entity. So, as Rohini being a person helping the clients in deciding the right structure, she has explained the different structures, like what is there in the private companies, what is there in the sole proprietorship and uh, partnership firms. But when it comes to going for an investors, or if you're looking for making your business bigger, I feel private companies are more suited. But yes, obviously you need to understand what is exactly your business. So as a company secretary, I am more focused towards the forming a company or LLP. So if I don't know how, like the audience, like who has incorporated company when, but if anyone is here who has worked or started a business before 2007, you must be aware that it used to take 30, 40, 50 days to just start a business company. Now, what has changed in last few years is that there is a SPICE form that has been introduced by government. Along with SPICE, they have introduced Agile form. So these are the name of forms that is given. But what effectively it has done is that they have reduced the entire incorporation process and the registration process from 30, 40 days to effectively 7 to 10 working days, depending on your requirement. So today, when you incorporate a company, you get your PAN, TiE, your ESIC, and other licenses along with the incorporation. So process is very simple. Whenever you apply for incorporation, you need to just have minimum, if it's a private company or a LLP, you need minimum 2 individuals. In private limited company, we'll speak about it first. In private limited company, 2 individuals, and it can be that 2 directors can be 2 shareholders as well. Now, there are many times we have a query that I be a director without being a shareholder, or can I be a shareholder without being a director? So these are permitted. So it requires minimum 2 individuals who can be the director and who can be the shareholder. However, a 2 shareholder can be different, 2 director can be different. For example, if my company does not permit me to be a director in any company, but I want to own the shares, I can do that. If I don't want to own the shares, but I want to be the director, I can be director, and I can ask my family members to be the owner of the shares. So mandatory requirement, 2 directors are there, 2 individuals are there. If it's a company, obviously company's nominee can be appointed as a director. Along with that incorporation process, we require the KYC documents of the directors or individuals who are getting appointed. If it's an Indian person, the PAN card is mandatory. If it's a foreign national, passport is mandatory. So PAN and passport, depending on the nationality of the individual. Along with that, registered address is required. Each company in India still required a physical address. So whenever you are incorporating a company, even if you don't have an office address, at least for the purpose of communication in company, you need to mention some address. However, it is very important to understand the location of the company. Few days back, I was discussing with the client. A person has incorporated a company, and the consultant told them that they can have a LLP anywhere, register office anywhere, and they shifted the register office at Northeast, at one of the native place of one of the promoter, because they had documents of that particular state. Now to shift that register office from that Northeast state to Mumbai, it has costed them fortune. So it becomes an important thing that how or where you are starting your company, which address you are providing. Your home address can be there as a registered office address, so it's not a problem. However, it's important to understand your long-term business plan and incorporate company, because specifically in India, most of the laws are either central act or a state subject. So when you have a company in Kerala or a Mumbai or a Gujarat or a Northeast, the laws will differ accordingly. So you need to understand where is your base of operations going to be, and then you can incorporate a company. Once you provide the KYC document, all you need is apply for a digital signature. Once digital signature is applied, your company can be incorporated within 7 to 10 working days. Now, along with the incorporation, government automatically provides a PAN and TiE number now. So if you are incorporating a company, you don't need to apply for a separate PAN and TiE. Along with incorporation, you get your certificate of incorporation where PAN and TiE are mentioned. Along with that, EPFO registration for establishment code are issued now. Once you incorporate a company, you'll get an email. The same email will be sent to the same email address will be used where you will be receiving the EPFO code. Along with that, you will get ESIC is mandatory now. And now, along with these documents, government has tied up with 7-8 banks. So you can select one of the bank and you get the bank account opening immediately with the incorporation. However, the process is still not opening of bank account process is not very smooth, because you can understand that banking RM needs to follow up and cooperate. However, the thing has been in place, so maybe we can expect that in few days the bank account opening will be the smoother. So you just apply for your incorporation. Sometime you get it within 7 to 10 days. The faster we have got incorporation is within 4 hours as well. So like afternoon we submitted the documents, in the evening we got the company incorporation, PAN and everything. Next day morning bank account was operative. So if the process is getting that smoother for incorporation of a company. Along with that, optional registrations are GST registration and PT registration. However, PT registration is mandatory in Maharashtra, Karnataka, and West Bengal as of now. and shoption establishment has been recently introduced. So for us, companies that register offices that are in Delhi, you directly get the shoption establishment license as well. For other state, it is still optional because government is still trying to integrate everything into the one document. But this is what you get when you are incorporating a company. More or less similar process is there for incorporating a LLP as well. However, with LLP, you don't get any of these things. So once LLP is incorporated, you need to apply for a PAN, and then all the other licenses. So while deciding the structure, the timeline is become one of the important aspect as well, because most of the time when we decide to start the company, it is always urgency. There are some investor is coming, some person is willing to invest. Then that time, if you are starting with a company, you need to understand that it will take at least 7 to 10 working days. If you are going to start with the LLP, you have to understand that it will take at least 20 to 30 days. And the unstructured business, which Rohini mentioned about partnership firm or your sole proprietorship, obviously you can't have the more partner. If you are going with a partnership firm, you can add the partner, but generally investor don't come in under unstructured entities. And if at all they are coming, everyone's liability is unlimited. So that needs to be kept in mind while going for incorporation. Rohini, will you be able to take the incentives part?
Yes. So apart from those factors that I just mentioned about, the reason why we thought this is very important for us to take you through this is because the entrepreneurs are so engrossed, so consumed into starting their business operations that they don't tend to think about the future of the company 5 to 10 years down the line. And hence it's a call which is taken purely basis uh, the quantum of money involved in setting up an entity, and hence it was very important for us, or we thought it is important for us to take you through this entire process of coming to a conclusion which entity is is good to go. I mean, we cannot. There is no set process. There's no set rule. It's basis the business that you intend to carry out, and the objectives that you have in mind for your business, the growth, the growth that you expect for your business to achieve. All of that, keeping all that in mind, you need to decide on the kind of entity that you want to go with. But there are other factors as well, which our government, not just the central government, but also the state government have provided various incentives, which we need to keep in mind while we take a call as to which entity do we want to go for. First is the DPIIT registration, which recognizes you as a startup. The second is the MSME registration under the MSMED Act 2006. Next slide. Can you go there? Yeah. I think I've taken this up in my last session, but I would just run you through this. The DPIIT registration is, for the criteria which needs to be met is the startup is to be incorporated as a private limited company or a registered partnership firm or a LLP. The turnover should be less than 100 crore in any of the previous financial years, and an entity to be considered as a startup up to 10 years from the date of its incorporation. In fact, to add to it, apart from an equity or a debt investment that any entity can take under the Companies Act, a recognized startup can also get an investment through investments in convertible note, which is a short-term debt which is convertible into equity at the option of the holder of the convertible notes. That's again an incentive, if I can call it, to startups. The benefits are quite a few. There's self-certification, which is permitted. There is 80% rebate in patent filings. In fact, trademark filings as well. There are quite a few benefits in terms of relaxation on the government fee which is payable. There is funding support and tax exemptions available, and many more. When I talk about self-certification, there are about 9 labor and environmental laws in which self-certification is permitted. In fact, it is very strange because when we represent investors, or we are carrying out a diligence on a startup, more often than not, we've seen that startups tend to comply with, I mean, obviously not the entire compliance, but partly they comply with a lot of labor laws for which they can actually apply under the self certification scheme while they're not really aware of it. So I think as a startup, you should be mindful of these incentives that the government provides. This this is this is a central government incentive, but there are state governments which have given out incentives, and they have also provided for self certifications under various other laws. So these labor laws, I mean, to what I recollect, are the Payment of Gratuity Act, the Contract Labor Regulation Abolition Act, the PF Act, the Employees Provident Fund and Miscellaneous Provisions Act, the ESIC Act. So these are some of these statutes where you can apply for self certification. There's this one form that you have to fill up and certify that you've complied with the norms under the particular regulation. So instead of going under those statutes independently, you actually just could make a filing of this one particular form. So you should be aware of that. Chika, next slide. Next is the MSME registration, again a very important one, because there are quite a few incentives which are available, which are attached to this registration. Not that, the least is the lower rate of interest on loans, the collateral free loans, the priority lending that you get along with the MSME registration. There are income tax exemptions which are available. In fact, there are protection against delayed payments which are available under the Act. So there is this particular committee which is set up under the statute, by which you can actually initiate uh, uh, you know uh, legal action against the particular vendor who's delayed your payments if you are an MSME registered firm. Thereafter, there are these incubation schemes, ISO certification charges, reimbursements which are available along with the MSME registration. So what I'm trying to say is these are some of the basic things which are available, some incentives which are available, the government has made available to startups. And I think as an entrepreneur, you should certainly ensure that you made best use of such incentives for the purposes of smooth functioning of your business. Last but not the least, since we're talking about the startups in Kerala, there is Kerala Startup Mission, which has certainly also come out with rolled out some incentives. Some of them, of course, are these investment funding related assistance. In fact, they've also rolled out some incentives for women entrepreneurs in order to help them carry out their business operations, for startups which have more than 51% holding of a woman. Such startups which have women entrepreneurs also get some sort of incentives. Hence, all of this needs to be kept in mind while you have already arrived at the kind of entity that you want to incorporate for the purposes of carrying out your business operations. Moving on to the business. So now that you've already set up an entity, be it whichever, there are a lot of basic licenses and registrations that you have to procure. PAN GST is the basic one. If you're looking at importing or exporting any goods or services, then yes, you have to go for the import-export code. In fact, PAN GST is something that these days with the incorporation, like Jika said, at the incorporation process itself, you tend to get it. There's professional tax. If you're looking at carrying out business operations in Kerala, there's trade license that you have to procure. Like unlike in Maharashtra, you don't really have a trade license concept as such. So there are a few states that you have to look at where there's trade license which is applicable. So here in India, it's not just the basic licenses, but you also have to look at the state from which we carry out operations and what the licenses registrations to be obtained locally under the state legislations. And last but not the least, the shops and commercial establishment registration also needs to be obtained. I think we've already taken care of this. Professional tax, like I mentioned. And there are a few information also which needs to be provided. Trade license is another thing that I mentioned. There's registration required. Yes, the validity is for 3 years, and for renewal, you need to apply for it not less than 30 days from the date it has expired, but not more than 90 days from such date. So you need to keep in mind these timelines so that you don't really falter. I know sometimes when we do a diligence on the company, and if they are not really mindful of these deadlines, then while you are pitching in for funding, your valuations does take a hit because these are non-compliances, and these non-compliances certainly have implications. Some of them include penalties, but some of them also include imprisonment. So there are penal provisions also included while when there is non-compliance involved. Next is the Kerala Shops and Establishment registration. Within 60 days from the date that the business operations start, the registration needs to be obtained. Again, the registration certificate shall not be valid beyond the year, so which means you need to apply for a renewal. So you could probably have some sort of SOPs in place within the organization by which you could probably get a notification just before the expiry of the due date, so that you don't really miss out on making these requisite applications for renewal. Also, it also provides for maintenance of registers and records under the particular statute, which needs to be taken note of. Business specific, so those were the general licenses that you have to obtain, but there are certain business specific licenses that also need to be kept in mind. Licenses, compliances. So if you're looking at if you are an R&D company, and into probably oncology, there are a couple of licenses that you have to take from the Drugs and Cosmetic Act. If you are into probably manufacturing of some drug, then yes, there are a couple of licenses to be taken. If you are into e-commerce, then there are compliances under the Information Technology Act which you need to be mindful of. So it's not just the general licenses and registrations that you have to obtain and carry out your business operations, but before that, think about the business that you're into and try and do your recce on the business specific license. Please try and approach the right set of professionals who could guide you through this. So in case if you're setting up a restaurant, or for that matter a catering service, there are these facile licenses which are applicable. If you're into retail, then there are legal metrology provision which are applicable, which you need to be mindful of. What is the size of the font which needs to go on the packaging? How is the packaging needs to be looked? All of that comes through a particular statute. So you need to be mindful of that while you carry out your business operations. Take the next slide. Now, moving on, it's not just about obtaining registrations, licenses. Now, there are these routine compliances that we spoke about, right? Now, routine compliances are under different heads. There are secretarial compliances under the Companies Act 2013, or an LLP Act if you're an LLP, and a Partnership Act in case you're a partnership firm. There are tax-related compliances. There are certain business-specific statutory and regulatory compliances, and there are labor law compliances. Now, as far as secretarial compliances are concerned, I think I would let Jigar take it, and post which I'll take you through the rest.
Thank you, Rohini. Yeah, so what you covered is absolutely right, that there are certain central act compliance requirements. There are some general compliances which is applicable to all businesses, and then there are certain business specific requirements. And in addition to that, when you are forming a company, there are certain sectoral compliance that you require. If you are a limited liability partnership, you require lesser number of compliances. If you are a partnership firm, since it's an unstructured entity, it requires minimum number of compliances. And sole proprietorship, you just need to file one your annual return and it's done. So technically speaking, if we see the private limited company, it is like maybe you can say that it is too much of compliance as compared to the sole proprietorship. But the reason why these compliances are made is that so it makes your business easily viable and business looks transparent. So for example, if a person is maintaining the sole proprietorship for 10-15 years, he might not have different documents available when he has taken what decision, what are the areas in which he has ventured, where bank account he has opened. He can just sign the documents and submit, and it does not maintain the records. So when it comes to company, the promoter gets the limited liability, as a shareholder gets the limited liability. So along with the limited liability, it comes the compliance. So there are different compliances that we required under the Companies Act 2013. I'll first touch base upon the Companies Act requirement. So say in Companies Act, you need as a directors, you need to hold the 4 board meetings. However, if it's an OPC, it still requires to hold 2 board meetings in a year where you record the decision in writing. What we do in a board meeting is that what your decisions business are taking, that needs to be recorded in writing, and this board meeting minutes needs to be maintained lifetime. It cannot be changed, or it cannot be like you have not maintained and it's okay. So as Rohini said, whenever you go for a funding, this thing matters a lot. So if you are a private limited company and you are not maintaining your registers, or you are not maintaining your board meeting minutes, your valuation can take a hit. Maybe not in the initial funding, but as and when you start growing, this thing becomes important. Along with the board meeting, there are certain other statutory registers that each company needs to maintain. So these are registers like your register of members, register of share transfer, register of borrowings, loan that a company has taken. So there are 7-8 registers which are mandatory, popularly known as a black book of a company. So that book consists of all the formats and it needs to be maintained. If you are maintaining this database regularly, it doesn't take more than a day to complete all the requirements. But if someday somebody is coming and then you are trying to backdate the work and you think that it can be done, then there are mistakes that can be found and it creates a lot of issues. So ideally speaking, if you are a private limited company, public limited company, or OPC, you should have be holding board meetings in physical, in actual. Now it's a VC meeting that is permitted. Along with that, you maintain the registers. In addition to the 4 board meetings, companies are required to hold one more AGM. So one AGM where the shareholders meeting is called, just like the meetings of listed companies. All private companies and public companies need to maintain their need to have at least one AGM every year, where the shareholders approve the account and all the important agenda items. Once the AGM is done, there are some annual filing forms that needs to be done. So private company needs to file their balance sheet and the shareholding pattern every year with the ROC. This form is mandatory and it cannot be skipped. Earlier, government was not very strict about it. So what used to happen is that there are many people who have not filed it for the years, or they have skipped certain years in between. Nobody used to come notice that. Now with the online filing, AI, and the way smartly government is using technology, it can be caught easily. So if a company has not filed any of the annual filing form, it directly throws the errors. I have seen this practically, that there are many banks who has approved the loan, sanctioned the loan, but just before the disbursement, they check the annual filing status. They said that till the time your annual filing is not done, will not disburse the loan. So private company gives you the benefit, it gives you the trust, but it expects you to do the compliances. So annual filing becomes important. In addition to that, recently the KYC of directors has been introduced. So every year, a director needs to verify their DIN number and the contact details using the OTP. It hardly takes 10 minutes, but the penalty is 5,000 rupees for non-compliance. So then it becomes the important aspect that it's a free of cost services. You just need to verify your OTP. But if you fail, the penalty is a bit higher side. So that is one. In addition to that, now there are certain other compliances that has been added. So if a company has taken a loan, then you have to file the DPT3 form. if there is some outstanding towards the MSME, which Rohini has said that as a private limited company, you can be MSME as well. So if you are MSME and if some company has not paid your dues for more than 45 days, they need to file MSME form where they'll declare that, okay, these are our dues and we have not filed it within the due date of 45 days. However, these are the requirements that a company needs to do. In addition to that, there are a lot of event-based requirements are there. So when you are getting the funding, you might need to go for allotment of shares, or when you are giving them somebody a stake in your company. So there is a requirement of doing the private placement offer letter, valuation, and things like that. And similarly, when you are going to add any person as a director, you can file that form. So there are certain mandatory requirements, and then there are certain event-based requirements. Plus, in addition to all these things, what private company gives is the flexibility to the operations. So when it comes to private limited company, the process is already set and defined under the law. So everyone is aware. So it doesn't create a confusion. What happens? What in the unstructured businesses? So for example, a unregistered partnership firm, the business goes smoothly when there is a dispute, when there is a lack of clarity. Everyone in the partnership firm thinks that they have done more than what they are deserved. Then it creates a dispute. In case of private company, ownership structure and everything remains crystal clear. It is filed every year with the ROC. So then it doesn't create dispute around the understanding of the business ownership and structure. Last but not the least, in the private company is the mandatory appointment of auditor and annual audit. So if it's a private limited company, public limited company, or OPC, appointment of statutory auditor is mandatory. A statutory auditor is a qualified chartered accountant who holds COP. However, in case of LLP or other forms of business, it is not required. But practically, if you are going to grow your business, auditor becomes the one of the most important person in your business, because some third person is verifying your books. So specifically when you have a partnership or a joint venture or a firm that where you have investors, this auditor ensures that the investor and everyone stays in confidence and they are aware that the business is functioning properly and the books are properly prepared, which is not the case always in the case of unstructured business. Now when it comes to LLP, the compliance requirement is very less. It's just the partners KYC that you need to do. There are 2 forms every year we have to file, and the only worrisome requirement in LLP is the signing of agreement. Since LLP is structured like a partnership firm, which has a separate legal entity and the corporate benefits, but it's more like a partnership firm. So whenever there is an addition or deletion of partner, you need to sign the agreement. And at the time of signing the agreement, you need to take a signature of all the partners of LLP. In case of private limited company, you don't need to go and take the manual signature of all the shareholders. Basically, you just need their approval in the AGM. Once they say, okay, it's done. In case of LLP, you need to sign the agreement. You take a printout of the agreement on a stamp paper, you get it signed, and you arrange the signature of everyone, and you have to file it with the ROC. So this is the one limitation of LLP, because of which we suggest sometimes client to go for a private company rather than going for LLP. Otherwise, LLP is a cost-effective structure currently. Though when it comes to the VCs, they generally go for a private company. But if it's a business which can be bootstrapped or which does not require many investors, LLP can be a suitable option depending on the compliance requirements. Another advantage of LLP is that the taxation structure in LLP works more like a private partnership firm. In case of a private limited company, the profit that you earn, when you distribute it to yourself as a profit, which is called as dividend is taxable at your hand. Earlier, private companies used to have a dividend distribution tax. So whatever net profit you have earned after tax, when you distribute it to shareholders, again you have to pay the tax on that dividend. Now that has been changed, but that dividend income is still taxable. Say you have earned 100 rupees, you paid tax of 30 rupees, net of 70 rupees. When you distribute that 70 rupees among your shareholders, that 70 rupees is taxable again at the hand of the recipient of the dividend. So say if 20 rupees you pay the tax, then your 100 rupees become 50 rupees. What happens in case of LLP is that you earn 100 rupees, you distribute say 70 rupees, then your tax that is allowed, certain amount is allowed as a tax expense there, and the remaining amount will be taxed as income in the LLP, and the amount that partners withdraw can be allowed as an expense. So the taxability impact is a bit lesser in the LLP. However, you need to understand the structure properly. But overall, for a small business, LLP is suitable when you want to withdraw the money out of the business. If your business is something where you are not going to take out a dividend or profit sooner, then it doesn't affect much. However, recently, in last 2-3 years, government, in order to promote the private limited company, has started reducing the income tax on the private companies. So in LLP, the tax is 30% plus all the surcharge and everything. Private company, it has reduced to 25%, which might get further reduced because government wants to maintain the uniform corporate tax across the world. So we are competing with the international other countries, so it might get reduced further. In case of partnership firm or a sole proprietorship, since it's an unstructured entity, there are no compliance required. You just need to do is the income tax filing, TDS return, and GST if you have. That's it done. There are no filing required. However, if it's a registered partnership firm, you might need to go to ROF, Register of Firms, and submit your document annually. However, it's not the online anywhere. So some companies, some partnership firms are doing the compliance, some are not doing it. There are no action that I have heard that anybody has taken. So the filing is not done, so investor does not get the confidence when it comes to getting into the partnership firm. But if you are not looking for investor, if you are looking for a smaller business, partnership firm can be suitable option. Just only caution here, in case of partnership firm and in case of sole proprietorship, the liabilities are unlimited of the partners, everybody, and they are jointly and severally liable. In case of LLP and in case of private limited company, the liabilities of shareholders are always limited. The liabilities of directors are limited unless there is a case of fraud or certain other act. In genuine business losses or genuine business cases, the liabilities are always going to be limited. So depending on this compliance process, you can take a decision whether you need to go for a private limited company or LLC or a sole proprietorship or a partnership firm. Rohini, you will take the labor law compliances.
Yes. So while now we've heard from Jigar on the statutory compliances under the Companies Act, the LLP Act, and the Indian Partnership Act. Moving on to the labor law compliance. Now it's a little trickier here in India because there are so many laws which are applicable to an establishment which is running its business operations. I thought some of the very key labor laws which we should be mindful of, which you as a startup should be mindful of, and probably we as professionals who have represented investors, wherein we carry out diligence on the startups when they are looking at investing into those startups. These are some of the basic labor law compliances which I think you as a startup entrepreneur should be mindful of. Before I start this, I'll take you through some of the very key ones which are very important. One is the compliances under the professional tax, wherein there are returns to be filed in the month of April every year. There are certain compliances under the Kerala Shops and Establishment Act 1960. Apart from that, there are also some compliances under the Prevention of Sexual Harassment regulation. That is, you have to have a policy in place which is in line with the Act, and also an annual filing to be done. Be clear of the fact that if you read the statute, it does not say that you need to have 10 or more women employees. It says 10 or more employees, which means if you have 10 or more employees, then you need to have a posh policy in place and be complying with the filings which are required to be done, the registers which are required to be maintained under that particular statute. Now, dealing with a few other ones, the Maternity Benefit Act. Now, these are certainly the central acts, but state legislations, the state government has also notified certain rules which need to be looked at. And hence, moving on to the Maternity Benefit Act, there are a few registers to be maintained. First, look at whether it's applicable or not. Thereafter, you need to maintain certain registers. There's an annual return to be filed under this particular statute. So be mindful of the returns and the registers which need to be maintained, because there are hefty penalties involved if you don't really comply with them. Moving on to the Minimum Wages Act, where again the state government of Kerala has notified certain rules wherein there are certain registers and records to be maintained, and all the registers that are prescribed under these rules need to be maintained for a period of 3 years from the date of the last entry made. So be mindful of that. Thereafter, the Payment of Gratuity Act. Now, if you're a startup, then this you can actually go under the self-certification scheme, and you don't really need to comply with this. You can go under that particular startup scheme. So I will skip this one, but this is again a very important statute which needs to be looked at. The Employee Provident Fund Act, again, there needs to be a registration done. There needs to be return filed, and of course there's return of contribution to be filed, and you need to ensure that you made the right set of payments to the government, because when there is diligence done on you by the investor, this is something which is very crucial. It's not just from a legal diligence point of view, but even the financial diligence will certainly highlight certain red flags if the payments have not been properly made. In this as well, there is a consolidated annual contribution statement to be submitted by 30th April every year. Thereafter, the Payment of Bonus Act. Here there is again rules notified. There are registers to be maintained, and there is an annual return to be filed. For this, see, it's not very easy to be complying with 10 different laws. In fact, more than that. You need to approach the right set of professionals who could help you do it. You could probably have SOPs in place by which you could set up a process by which that particular tool would notify as and when there's due date which arrives for a particular return, or probably to renew your particular registration. So these are all tools which are available. It's just about having all of this configured in an organization, in an establishment, for smooth operations. It's not just, even if you're bootstrapped, even if you're not looking at external funding, but tomorrow, in case there's any show cause notice which comes to you, it involves a lot of penalties, hefty penalties, because there are interest on the penalties which are imposed. At some point, there are imprisonment also as a consequence. So you need to be mindful of this when you're looking at these labor law compliances. Now, as you're aware that we have a lot of labor law legislations, but the government is trying to come out with the labor codes, which has certainly received the blessings of the president, but is yet not notified. These are the 4 codes, which is the Code of Wages, 2019, the Industrial Relations Code, the Occupational Safety, Healthy and Working Conditions Code, the Social Security Code. I'm hopeful that, or we all are hopeful that this would surely result in ease of compliance and effective implementation of the labor legislations. Before I move forward, I would like to point out that these are all labor law legislations which are employee welfare legislations, and most of the organizations, the mid-size, have these HR policies in place. Let me tell you that, for example, as an example, I'll give you that the leave entitlement that you mention in your HR policy, it is not something which you can unilaterally decide. The government has stipulated certain number of leaves which should be extended to an employee. It's their entitlement. For example, in Kerala, it says that 12 in a year paid leaves are permitted. If you want, as an employer, you can certainly give out more, but you can't give out less. And this is a lacuna which we have found in HR policies. So your labor law legislations are employee welfare legislations, and hence it does have an impact on the HR policies that you have in place in your organization. So please be mindful of that. Now, understanding the impact of unsuitable business structure and non-compliances. To this, I don't have too much to say, but I'm sure that you understand that there are laws, there are rules, and when you break them, there are consequences. And all of us should be mindful of that. Hence, if you as an entrepreneur approach the right set of professionals for the right set of help and get it at the right time, I'm very certain that you can certainly avoid any kind of such consequences. Because business risk is one thing, which I'm sure you as an entrepreneur can certainly handle. But the legal risk which comes along with it, if you don't comply with the norms, the legal regulations, the rules, then there are hefty penalties and it will be very difficult to come out of it. Hence, it's very important for you to ensure that you've covered all your legal base. With that, I think Jigar and I'm done, unless Jigar has something else to add to it.
No, Rohini, I guess basically we've covered, we have kept 10-15 minutes for question answer session. So just before we take this question answers, I just wanted to comment about this particular point only, about the unsuitable business. The point that we were discussing, like which is the best business model. So as a practicing professional, we keep on getting this kind of question. And one of the biggest mistake that entrepreneurs does, who is not able to take the business to next level, not because the business is bad or the idea is bad, just because they have structure which is bad. So I feel like selecting your right business model is really important. It's like selecting a vehicle. Say if you want to travel from Kerala to Mumbai, you cannot just select the cycle, or you cannot just hire the flight always. You need to understand which is your business model, which kind of activities that you are going to do, what are the costs involved into that transaction, and then you decide your business model. And that is where the professional gets becomes the important. What happens is that maximum time we do is that we just find the cheapest option, understand that thing, and then we just go ahead and complete the process. So this is where you're selecting a right business model to start your business becomes important. There are all these solutions available, but every solution comes with the cost. So you can start with the LLP, then you can get converted into private limited company, you can convert private company into public company, you can go for public company IPO, or you can convert public company back to private company. Everything can be done. Your register office, like we have given an example that if your register office is in some different state, you can get it back into your own state, or you can just move it out to other state. There are certain state laws that you need to comply according to your register office. So for example, if I'm in Mumbai and if I have some friend in Kerala, and if I just incorporate my company with the registered address of Kerala, I need to make sure that my company complies with the Kerala laws that is required. Um, Not the labor laws, but the other laws which are like registration of license and everything. I need to make sure that I am complying with it. So selecting a right model and selecting the right state while doing the business becomes important. All these things you may not get everything on Google, because sometimes we search data, Google gives the data, but then this data may not be sufficient. So it's always important to understand who is going to be right person for you, and then assisting them taking the decision accordingly becomes very useful for you to take a final decision. Because it should not happen that since we said that it's a company, that private limited company, which is the best form of business, so you form a company. It might be the case that you can start with the LLP because you are not you may not require to make that expenses, or you might try to understand that cost is lesser, let's start with the LLP. There is no point starting with the company. So it should not happen. And most of the time the client that comes to us, they are like, we thought of this thing, now there is a mess, let's close this company, start a new company. So this should not be the case for you after you start the company. So understanding and finding the right structure becomes really important for you when you planning to start a business. We are open for questions if anyone has any questions.
Do we have any startups who've joined the session today? And from which sector do they belong? We would like to know.
There is some hand raise in the audience. I don't know. Mr. Deepak, can you unmute? Okay, I guess there is network issue. Deepak has
Yeah.
dropped out.
There's another example. I think Jigar would agree with me, and we did a matter together where there was this company in the gaming business, and setting up. He set up a one-person company because he thought he could do it on his own, and it was a little less expensive as well, and he thought one-person company works well for him. So he and his father, because you require two shareholders for the purposes of setting up a one-person company. You need two shareholders, right? A nominee shareholder. So, and he set up a one-person company, and thereafter he realized that he wanted some funding for further improvising on his games, and he did identify a few investors for his business. But unfortunately, by the time he could come to us, for the help of drawing up the relevant investment documents and carrying out the Statutory Compliances, we realized that it was a one-person company, and for him to get in funding from a third person would not be allowed in a one-person company. And thereafter, we had to convert. We had two options. One is to convert the one-person company into a private limited company, and thereafter help him get in funding into that particular private limited company, or set up a new entity afresh. While setting up an entity was much more faster than actually converting the one-person company into a private limited company. I mean, that's the process in place. Hence, it's very important to, like I mentioned earlier, very important for you as an entrepreneur to see to it that what is the objective that you have in mind for your business, and if you are intending to go beyond your friends and family to get in money for your business, then you should probably be going for a structured entity, and more so a private limited company. I mean, that's briefly put.
Also just showing, I'll just point out that few things that has happened during that time. Since it's a company that has an established track record, if you are starting a new company, it does not get the entire legacy together. You can just obviously write it down, but doesn't get the entire legacy together. Plus, the second issue that we have is that one-person company cannot be immediately converted. Sometimes there are some restrictions that are there. So the law says that there are provisions, but then provision comes with its own set of compliance, which can bring in more difficulties. So a one-person company, if you're looking for this kind of investment, becomes the wrong choice of setup. Similarly, the other example that I can think of currently is there are the current case that we are still fighting with the NCLT. So it's a sub judice, but without taking name, I'll just give the example of it. There are two parties, the Indian person and the foreign person. Foreign person holds the majority shares, Indian person is the promoter and a managing director who is controlling the company. What has happened is that for some odd reason, the foreign person is not supporting the Indian company. The one of the promoter has enough money, so the both the partners are not in talking terms today, then it becomes very difficult to maintain the business. Now the way they have structured is that you require approval of both. So today they have money lying in bank account, they are not able to make the payment. So it's not just the selecting the right model, but it's understanding that what will be the structure that you are going to work, and what will be the case if there is a deadlock in future, and how will you get exit from it. This becomes important when you are working in a partnership, or like say there are friends who have started the company, then this thing becomes really important, because your business should not be affected in future, or specifically when there is a deal going on, or when you are getting the investment. That time getting the right consultant becomes very important, because they will foresee all this stuff, and they'll try and give you an idea that how you can solve these issues, because sometimes issues are not big, but since there is no process defined, it creates a deadlock, and then that deadlock becomes more difficult to solve than anything else. So that should never be the case where you are unprepared for the future dispute. If you are starting a business, you have to think that there might be a dispute, how to solve the dispute, so that when it actually you get the dispute, you have already set of roles, responsibilities defined, and you can at least get through it. Otherwise, what happens is that then it creates a deadlock, and deadlock is never good for a business. So this is one example which I realized, and then the problem is that with this kind of client, we get enters much late into their business. So what all we can do is that we can just navigate them with the existing provisions, rather than helping them when the company started. And most of the time it happens that when you are starting a company, you don't foresee all that future things, so you don't take the advice. So it becomes important that specifically whenever you are starting a company and you are looking for investment, or if there are more than one promoters are there, it's more so important to have an agreement in place between the promoters, so that tomorrow there should not be an issue. There should be a clause for entry and exit of the promoters, so it should not affect the business, because end of the day your business should be something that can go perpetual. Yes, Rohini.
Absolutely, Jigar. I completely agree, and I know what the matter is about. So yeah.
Yeah, you okay, Rohini, we have one question from Ms. Khyati. For inbound investment, what is the entity to be formed?
Do you want to take that, Jigar?
Yeah. So basically, I presume inbound investment means you are getting some money from the foreign country in India. Yeah, specifically foreign ones. Yeah, right. So whenever you are getting the inbound investment from foreign companies in India, the best structure today is the private limited company, because RBI has set of rule. Everything is very clear. There are most of the industries where you have 100% foreign investment is permitted, FDI is permitted. So it's easier. You just get the money. Bankers, your AD bank is aware about the compliances. You just need to inform that I am getting money in the my bank account that is for my company. Then you can easily get it. And the compliance requirements are much simpler, and set. It's like a clearly defined process. LLP is now permitted, so it is getting settled. So you can get either through a private company or through LLP. However, unstructured entities, it's impossible, because ultimately you'll get it in your individual name. So end use becomes the difficult, and even if you are allowed to use the money, when it comes to remitting back that money, it becomes the problem. Getting money in India may not be the problem. You might get it in your personal account. However, when you are going to pay back, that time all this compliance will become the issue. So specifically when you're looking for inbound investment, it's advisable to have either a private company or LLP. Yes, when you want to add something here?
No, I think you covered it all.
Okay.
In fact, earlier investments into LLP was not permitted. It was only into
Yes.
private limited company which was permitted. Later on, they relaxed the norms, and thereafter FDI was permitted into a limited liability partnership. Yet, like Jigar rightly said, private limited company is the best form to go to in case you're looking at getting in foreign investments into India.
Also, the end use becomes easier. If it's other forms of entities, it becomes difficult to use it here. And still, LLP is a newly permitted rule. We are not very sure that how will they permit the sending money back to the investors, because that becomes the most crucial part for any investor. And that's why I've seen that most of the time investor does not feel very comfortable getting into any other structure other than the private company or a public company.
Absolutely. I think, Divya, Boni, I think what you guys can do is, in case there are any questions that you receive from the participants, we'll be happy to take it offline.
Okay. Any more questions from participants?
Thank you, Kathy, for the message. Very kind of you. I think, Divya, we'll wrap it up.
Yeah, because I think there won't be any more questions actually from participants.
Yes.
Yeah. So thank you, Rohini. Thank you, Jigar, for this wonderful, informative session. And we're looking forward to more such events in the future to come. And thanks a lot. Thank you, participants.
Thank you for having us on board.
Yeah.
Bye-bye.
Yeah, thank you. Everyone.
Thank you.
Bye.
Thank you very much. Thanks.